Hello folks, welcome back. In today's episode, we'll be discussing two major themes that are playing out in the Indian consumption landscape, right? And one company that lies at the center of this consumption boom and how it can potentially benefit as such, right? So two major trends that we're seeing is one, an increasing demand for convenience, right? Right from getting food delivered to your doorstep to getting your groceries delivered within 10 minutes at your doorstep, the urban consumer as well as increasingly now the tier 2 tier 3 consumer is choosing convenience over a lot of other things. The other major trend that we are seeing is a increasing focus on experiences, right? People want to go out to more concerts, people want to go out to more stand-up comedy shows and such, and spend more of their disposable income on experiences, right? And Zomato has kind of built out a business catering to each of these segments, right? They've built out Zomato, which is in the core food delivery business. They've built out Blinkit, which is in the 10-minute delivery space, and they also have District, which is in the going out ticket booking sort of space, right? So positioned well to cater to all of the three demand growth levers present in the country, and as a result of that, benefit from the trends that we're seeing in urban consumption as such, right? So what we'll do in today's episode is see how the business has performed in quarter one of this year. More importantly, also try to gauge some of the trends that we are seeing across all three lines of businesses that will help us develop a good understanding of where this business could be a few quarters down the line, and how the growth prospects for the business look as such, right? So the first most important metric that you track for a business like this is the gross order value, right? And gross order value obviously has grown for all three verticals. The most notable thing in this quarter was that this is the first quarter in which the gross order value for Blinkit exceeded Zomato, right? So for the largest part, Zomato was the core bread and butter of the business. Blinkit was a much smaller part of it, right? Those of you who would remember, when Blinkit was purchased, it was more a rescue sort of a purchase that was done. But since then, Blinkit has kind of grown tremendously, and it's now the largest part of the business, right? So GOV grew 16% for the food delivery business, reaching 10,700 crores. The Blinkit GOV grew a whopping 140%, right? Reaching 11,800 crores, and District GOV as well grew at a healthy 87% to 2370 crores, right? More importantly, the take rates that you typically get that basically decide how your revenue gets converted from your GOV were quite healthy in both your Zomato and Blinkit businesses, right? So the revenue for Zomato was 2657 crores, and obviously 24.6% sort of take rate there. Similarly, the Blinkit revenue was 2400 crores, close to 20% take rate. And the district business, because it's a ticketing business and there's kind of lesser participation in the broader value chain, the take rate there is obviously lower at around 8.7%, driving a 200 crore revenue, right? So across business lines, relatively stellar sort of performance. More importantly, the store growth for Blinkit, right? Blinkit now is the primary growth lever for Zomato. The new store growth for Blinkit has been extremely impressive, right? So from around say 640 odd stores in Q1 of last year, they've now grown to 1544 stores, right? So a sea change in terms of growth that they have, and in terms of their target for end of this calendar year, they're targeting 2000 stores, right? With the CEO also saying that they have reasonable visibility for growth up to 3000 stores, but the target for end of this year is 2000 stores, right? So reasonable growth in the number of stores for Blinkit as well. And in terms of customers, again, one of the primary concerns that a lot of people had was whether the number of customers for Blinkit at some point could grow fast enough as such, right? And that number has kind of done quite well. So while Zomato served 2.3 crore odd customers, Blinkit is now at 1.7 crores, right? And at some point it could, as it has exceeded Zomato in its GOV, at some point it could naturally exceed Zomato in its number of customers served as well, right? So that gives you an idea about the range of growth that the business has kind of seen. The margin story wasn't as impressive, right? So Zomato business, if you remember, for the last few quarters, they've had consistent improvement in their EBITDA margins. that has kind of tapered down slowly, right? So this was a QOQ decline in their operating margins from 4.4% to 4.2%. Uh, the district business has been at relatively stable kind of loss making levels around 2.3% negative in terms of EBITDA margins. But most impressive was the Blinkit part of the business, which though is still loss making at minus 1.4, improved, right? So it was minus 1.9 a quarter back. From those levels it's come down to minus 1.4, which given its stage of growth, right, given that it's growing its store base, growing its base so aggressively, at this stage of its growth, typically having growth in margins is typically considered challenging, right? So the combination of very strong store growth, driving very strong GOV growth, and at the same time having a margin expansion story going on as well, actually brings out a very strong story for Blinkit as such, right? So that was a quick summary of the Q1 results for Zomato. Obviously, very strong performance from Blinkit, good performance from Zomato, and District, while still a small part of the business, is still managing to do reasonably well, right? Going forward, obviously, as both Blinkit and Zepto now become kind of very, very dominant players in their respective markets, this will be the central part of the Zomato thesis, right? How well Blinkit can scale, not only to the 2000 stores that they're planning by end of this year, but going forward as they've guided, what is their plan for the next 1000 stores and so on, and more importantly, how the average order value metrics, etc., there can improve, right? So what we've seen is that while the business has kind of scaled reasonably well, the average order value number hasn't really moved much, right? It's broadly been in the same, say 600, 650 odd range, not really stretching beyond that, right? And if you want to really have your profitability, etc., kick in, you would want to stretch that number a bit further, so that you have more money left on a contribution level as such, right? So that will be an interesting story to track. So two major things that you want to track for a Zomato sort of business. On the Blinkit front, one is their store growth expansion, what kind of guides they have once the 2000 store growth number is met. Second is the AOV number for a business like Blinkit, and whether it can get past that plateau of around 650 odd or so, and move into the next trajectory as such, right? Zomato's core business is now reasonably well settled, growing at a reasonably good pace. Some of the other competition coming in from time to time, but broadly a duopolistic market. So that market is relatively safe now. It increasingly looks like the hyperlocal market is moving towards a duopolistic structure as well. So broadly, kind of well positioned from a market structure point of view, two good growing markets, both duopolistic sort of segments. So you just need to kind of track incremental growth for the Blinkit business from here, and margin expansions, etc., that a lot of market participants are worried about, typically kicks in as you have your scale improvement, etc., happen, right? So that's not too much of a worry. And as your kind of growth tapers off, that margin improvement will anyways happen as such, right? So that should be the easier part of the puzzle. The more important part, and the more important part that market participants should be focused on, is how Blinkit can potentially grow from here as such, right? So that was pretty much it for this episode. We hope it added value. If it did, please consider sharing it with your friends and other market participants. And we'll see you in the next episode. Thank you so much.